Hello, it's time to get fiscally fit with Credit.org.
This video is a free service of Credit.org's Fit Academy.
June is National Homeownership Month, and we're here to help people who want to get approved for a mortgage loan and become homeowners. Today we're going to cover 10 reasons loans get denied and what you can do to get approved. Reason 1. Your credit score is too low. Your credit score is one of the first things lenders look at. What can you do about a low credit score? Start by checking for errors. Make sure your credit reports are accurate and up to date. Reason 2. You had a recent bankruptcy. Your loan application can be derailed if your credit report has a recent bankruptcy or other negative listing, like a tax lien, legal judgment, or unpaid collection. Make sure any debt discharged in bankruptcy isn't still listed, and consider adding a 100-word statement to your credit report explaining your situation. Reason 3. Your debt-to-income ratio is too high. You can learn about your debt-to-income ratio at Credit.org. If your debts are too high relative to your monthly income, lenders won't want to lend to you. To improve your debt-to-income ratio, pay down debt, increase your income, or both. Reason 4. Your employment history isn't consistent. Mortgage lenders are looking for borrowers with job security. If you've changed jobs recently or often, they'll see that as a red flag. Document your income thoroughly in your loan application, and if you have a new job, demonstrate to the lender that the position is consistent with your prior work history. Reason 5. Your income is too low. Lenders want to know your income is stable and they want to be sure it's sufficient to make your loan payments. Obviously, you should only apply for loans you can afford, but make sure you aren't unfairly declined by documenting your income accurately and completely. And don't make any unusual financial moves when you're applying for a loan. Avoid big money transfers or other kinds of loans before and during the mortgage application process. Reason 6. You have debts that weren't disclosed. Your lender will find out about all of your financial obligations, even the ones not included on your credit report. If you have debts you didn't disclose, the lender will pull the plug on your application. Don't forget any of your debts or your obligations. Include things like child support and alimony or personal loans. And don't go out to buy a car while you're in the process of applying for a mortgage loan. Reason 7. The risk to the lender is too high. While all these loan rejections are about how risky you are to the lender, sometimes the loan itself is risky, even if you are a qualified borrower. If you're borrowing to buy a risky property or if there's anything that doesn't quite add up for the lender, you can overcome those fears with a larger down payment and by having cash reserves on hand. If it's clear you can afford to weather a crisis, lenders will feel more secure. Reason 8. Your loan application has errors. Lenders have a lot of loan applications to review, and if yours has errors, they'll reject it and move on to the next one. Fill out your loan application completely and carefully to avoid being rejected. Understand the lenders will look over your tax returns, bank records, and credit report, so document everything they're going to find in your application. Reason 9. Bad timing. You've just had a divorce, bankruptcy, or health issue, and it might not be the right time for a mortgage application. Sometimes you have to wait 6 months and spend that time demonstrating that you have stable income and can handle a mortgage before you apply again. Reason 10. Subjective rejection by the lender. Sometimes a lender will subjectively reject you for reasons outside of your control. Even if your computer says yes, the person reviewing your application might say no. To avoid having lenders reject you because of a gut feeling they have, you want someone with experience in the mortgage industry to help you with your application. Pre-purchase counseling from a HUD-approved housing counselor will help you prepare an application that is more likely to be approved. Housing counseling is also a great idea if you've already been rejected for a mortgage loan. A counselor will help you figure out what went wrong and come up with a plan to make your next application successful. That's our quick overview for 10 reasons loans get denied. Follow the link in the video description to learn more. Have a great National Homeownership Month and visit Credit.org anytime for free education and counseling designed to help you eliminate debt and achieve homeownership.